Is present, and I know for a fact some of those other members are on their way. Good afternoon, everyone, and welcome to our second hearing of the interim. We're going to be taking up our charges related to state investments and natural disaster funding. We're also going to discuss our monitoring charges relating to the reappraisal of property in a disaster zone and changes made last session affecting the permanent school fund. We are going to hear invited testimony on all of our charges first, and then we're going to hear public testimony. If you are here wanting to provide public testimony, we'd ask that you fill out the cards witness cards in their entirety and turn into our clerk. And if you have written testimony, please give us that with your name on it and 40 copies, please. At this time, I'd like to begin discussing our interim charge on the investment of state funds. Specifically, we were directed to review the investment strategies and performance of funds invested through our teacher retirement system, our permanent school fund, and other investment funds with the goal of maximizing investment income to the state. Earlier this month, the Lieutenant Governor expanded this charge, directing our Finance Committee to examine the long-term facility plans for TRS and specifically to review facility space cost of the Investment Management Division. We are so blessed in Texas to have some of the highest performance investment portfolios in the nation. And last session, we passed several reforms that will make these funds even more successful. We improved investment opportunities for the Economic Stabilization Fund managed by the Comptroller. We put the TRS Pension Fund on a path to actuarial soundness. We increased distributions from the Permanent School Fund. To begin this conversation, I've asked the Legislative Budget Board staff to provide an overview of our various investment funds and how they're performing. I also asked them to recap charges made last session related to those accounts. And before I call them up, I want to recognize Senator Taylor's here. Good to have you, Senator Hancock, and we'll still have some more coming in. So, Chair will call George Purcell with the Legislative Budget Board. I'm taking everything. It's not, I don't feel bad. I'm just, my eyes are on it. Yeah. Okay, you're in charge. You know the routine. State your name and who you represent, please.
Good morning. My name is George Purcell. I'm an analyst with the Legislative Budget Board. I will be walking you through the first part of the presentation from the slides that you have before you.
Great.
The slides I will be presenting are a brief overview of some of the information contained in an interactive graphic on the website of our agency. That graphic contains all data we received from agencies for the major state investment report going back to the first report issued for fiscal year 2004. This report is required by statute under provisions of Senate Bill 734, 2001 legislative session. The slides you have reflect data for fiscal year 2018. We are in the process of gathering data for our fiscal year 2019, and when we have submissions from all agencies, the interactive graphic on our website will be updated. The first slide on page 2 shows the relative market value of the funds we track in the report as of the end of fiscal year 2018. I want to emphasize this is not all funds held by the state, it's merely the funds that were identified as part of this report. As you can see, the Teachers Retirement System Fund is larger than all the other funds put together and represents 61% of the market value of all the funds we track. Turning to page 3, this shows gross returns compared to benchmark values for selected funds from the report. The top graph shows the gross return for fiscal year 2018 in yellow and the agency-selected total fund benchmark below that in brown. With the exception of the Texas Economic Stabilization Fund, the funds exceeded their benchmarks in fiscal year 2018. The second part of page 2 shows percent of fund balanced that are managed externally for each of the funds. And as you can see, it varies significantly between the funds. Turning to the next page, the final slide I will be presenting is an example of the historical information contained in the interactive graphic for the year's gross returns, contributions, and distributions. We've selected TRS as the example fund for this. However, the information is available for all the funds on the interactive graphic on our website.
Oh, sorry.
Go ahead, John.
So this is where I guess I jump into
in.
the LBB. So I'll just mention that interactive graphics available on our website. There's a button on towards the right that you can go and find it. And obviously you can select any year between, I think, 2001 and 2018, which is our current, and that'll continually get updated as we get new data when 2019 comes in. So that is available for
Awesome.
everybody, and you can pick between all of these indicators. We also issue a paper report, and we web publish that as well, and that is also available on our website. Just for everybody's reference, I'm going to pick up quickly on page 5. We were asked to present a high-level overview of significant legislation relating to these funds that are under discussion. I think a couple of these one has been discussed. You mentioned the TRS, the major TRS bill, Senate Bill 12. There's a little bit of information there. There were some investment changes made in terms of the Economic Stabilization Fund and TESTIF, which I know the comptroller's here, they could speak to if you'd like. And then there's a couple here related to the Permanent School Fund. But we've been asked, our staff has been asked to present a little bit of a broader overview of the history, the legislative history of the PSF. And so the next slide on page 6, and we were asked to go past this last session and kind of go all the way back to when
It's a little history,
things started changing.
Yeah.
So I'll do my best.
Not all of us have been around as long as Senator Whitmire, so we may need some historical.
Well, I only go back to 2001 here, actually, so I was actually around for all of this. But back in 2001, prior to this bill, House Bill 3558 in 2001, the authority of the School Land Board as part of the Permanent School Fund was more limited than it is today. And the sort of legislative history is a history of incremental broadening of the authority of the School Land Board to invest and to distribute from the PSF assets that they control, interspersed with some sort of methodology changes, and then this last session some reforms that you mentioned earlier. So back in 2001, prior to this date, they were largely limited to, School Land Board was largely limited to taking proceeds from land sales and buying other land with it. And any other sort of royalty interests would go to go to the corpus of the PSF that the State Board of Education controlled and be invested by them. This bill, under back then Land Commissioner Dewhurst, I believe, broadened their authority to invest those land sales and mineral lease and royalty revenue into other land or other mineral and royalty interests. Now there was a window that was put on this. If they couldn't use those funds within 2 years, it would then move over for investment by the State Board of Education.
Interesting.
So that happened in 2001. In 2003, there was, what I'll describe as kind of a modernization of the distribution methodology for the Permanent School Fund in terms of what the State Board of Education controlled. It used to be all dividends and interest from investments went to the available school fund, and that was changed to a total return methodology, so a percentage of market value over 16 trailing quarters, not to exceed 6%, and that continues to this day, that methodology. So then in the middle of the decade there, you'll see some incremental changes, further broadening the investment authority of the School Land Board to include investments in infrastructure, other real estate investments, and to pay professional fees for that investment. And importantly, that 2-year window of if they didn't use it, it then reverted to the State Board of Education's portfolio. That 2-year window was eliminated. In 2011, there was a constitutional amendment passed that broadened their authority to distribute, the school land board's authority to distribute, and they, for the first time, could distribute directly instead of making distributions to the State Board of Education that indirectly fed into their distributions to the available school fund. School land board could directly, at their discretion, deposit up to $300 million a year straight into the available school fund. And then lastly, we get to this sort of set of reforms that y'all passed last session, expanding the governance number of members on the school land board from 3 to 5, requiring some more coordination between the school land board and the State Board of Education for asset allocation coordination. And then importantly, the House Bill 4388, establishing the PSF liquid account to invest school land board cash, and some more reporting requirements in that bill. And then lastly, there was another constitutional amendment to further broaden the direct distribution from school land board assets to the available school fund, increasing that limit from $300 million a year to $600 million a year, actually not only from the school land board, but conceivably from the State Board of Education, any entity. And then one that we inadvertently left off, but I want to mention here, House Bill 4611, which changed statute to include, there's a part of statute that says the State Board of Education shall sort of earmark 50% of their distribution to the available school fund for the technology and instructional materials allotment or fund. And prior to this bill, that was just the State Board of Education's distribution to ASF. And this bill would now, moving forward after this biennium, will be both State Board of Education distributions to ASF and school land board distributions to ASF. So that was a sort of a quick history there of PSF. The next 2 slides are just really for your reference to give you a broad picture of the growth in the corpus of the Permanent School Fund. On page 7, this is all of PSF with the State Board of Education assets in yellow and the School Land Board assets in red, and then noting that beginning in fiscal 20, a substantial amount of that red part, the School Land Board cash holdings, are actually moved over to the PSF liquid account under control of the State Board of Education. And then at the bottom is just, you see those little blue lines at the bottom of the top graph. The bottom just breaks those out so you can see them, and those are distributions from all of the PSF to the available school fund over the years since 2007. Finally, the next page is more specifically about the real estate special fund account under control of the School Land Board and its holdings since 2007. As you can see, 2007 total assets for real assets, cash, discretionary real assets and cash for in the RESFA at $1.5 billion, and in 2019 was $8.6 billion. And then at the bottom there, distributions from the School Land Board either to the corpus of the PSF controlled by the State Board of Education or directly to the available school fund. And that concludes our remarks, and we're happy to take any questions.
Great visuals, great visuals. Go back to that very first page. I actually turned around and asked my staff, I think that all totals about $250 billion, right? I mean, I could get out my trusty
I think that's
calculator,
about right, yeah.
but we're looking at a lot of money, $250 billion.
It's a substantial amount of money, yes.
Yeah. So this provides a really good overview on how our funds are performing in comparison with each other. But have we compared with other states, apples to apples, like TRS investment, like states, maybe California and Florida in terms of size? How are we doing if we compared fund to fund? Have we looked at that?
As far as I'm aware, no, it's not part of the statutory requirements.
No.
Of the Major State Investment Board.
It would be a good gauge to see how well we're doing.
In the Major State Investment Fund report, there are fund-provided benchmarks that we put in that report that are actually in here. That report doesn't specifically then go on and sort of compare to other major state investments in other states. I know there's been a number of reports that have done so, and we haven't produced that information, but we can certainly find the most recent versions of that.
It would be very interesting, I think, for us to look at that, and I think it would show that we're doing a really good job, I think. Can you speak generally as to how each fund determines its asset allocation and manages its risk, and how they vary? Just
No.
what?
I'm sorry.
I really want to hear that one.
So each of the funds, and I know you have a couple of panels coming up where
Yes.
they will go into great detail on that, but they each serve slightly,
They all vary, right?
they vary.
Yeah.
They have different investment goals, and so it's those fiduciary boards and their decisions about what the proper asset allocation and management structure is to accomplish those investment goals. And I think we should let them kind of tell you.
Well, then generally, some of them are internal and some of them are external, correct? Just-
Absolutely,
I
and
hope
those
they will fill us in
they're
on that.
changing, and I think you'll hear from some of these funds that their strategy in terms of the share of external versus internal, they're planning on making some changes. So yeah, and it's not a static
Right,
percentage.
right. Unless it's dictated by the legislature, right?
Well, I mean they are fiduciary funds, and so they certainly they have their own responsibilities
Yeah.
and their governing boards.
Senator Hinojosa.
Just, I guess you also set out the percentages that are external investments compared to internal from each of the different systems.
Yes, that's the bottom chart on page 3 is the percent of the fund balance that's externally managed for some of the funds. We focused on, there are a few more funds, smaller funds that are in the interactive graphic, but we wanted to have it a little cleaner for the presentation.
And I think as each entity comes before us, they'll probably get into greater detail. Senator West.
Madam Chair, members, I've always asked about the historically underutilized businesses with these funds, and frankly, over the years I've been on the Finance Committee, there's been really no real progress. There's been a lot of lip service. And so, Madam Chair, if it's okay, I would ask LBB to kind of give us an idea as it relates to the external fund managers, who they are for each one of these agencies, and to the extent there's an overlap, that you provide us a chart in terms of the overlap and how much money they've been paid. But I do plan on making certain that we address this issue for once and for all, though, as opposed to continue to give them lip service.
Duly noted. Senator Colhurst.
Hi, Madam Chair.
Hi.
Thank you. John, if you could go to page 7, I just want to make sure I'm reading this right. So the top chart obviously shows us the PSF as managed by the SBOE in the yellow, and the red is the State Land Board. The blue is the ASF. I'm assuming that the bottom chart is just a greater, a more expanded portion. So in 2019, we see, is that, that relates to, going back to your other page, of when we passed the constitutional amendment of increasing the distribution from the SLB or SBOE from 300 to 600 million. My question would be, as I'm looking at the blue, and that's the ASF distribution by SBOE, is pretty, I mean, it goes up and down, but relatively flat through these years, while the SLB distribution becomes greater. Any reason for that? Is there a balance? Is there a requirement statutorily or constitutionally?
Well, so what you'll hear from the representatives of the Permanent School Fund, the State Board of Education side, so they operate under this constitutional total return distribution methodology. And so there's a couple of parameters in the Constitution, can't exceed 6% in any given year, but under that, they approach it with this concept of intergenerational equity. in terms of setting a rate, setting a percentage, and the state board sets this prior to every session, setting a percentage that preserves the corpus of the fund so that future students get the same benefit as current students, essentially. And they have a formula, and
that would be a correlation to the growth of the students versus the growth of the corpus, probably.
Absolutely. So they take into account inflation and projections of long-term enrollment growth. Any money they'll get from the school land board, they'll subtract, and it starts with their assumption of their rate of return that they think they're going to get, and they start subtracting inflation, enrollment growth to come up with a range, a percentage range that the State Board of Education then selects, and that becomes the distribution rate.
But it is interesting, off of the state land board, there has been more distribution proportionately than off the SBOE, as I'm reading your charts.
There's been more.
The gray part grew more than the blue part.
So recently, yes, and now the distributions directly from the school land board is more discretionary, I'll say, and there's been a couple of moments of in each of those prior to 2020 and 21. Those I think are $300 million each. Those gray bars, and then this past time, as a contingency, that was increased to the full $600 million, assuming the constitutional amendment passed that allowed school land board to distribute that much. The full $600 million each year was distributed directly from the school land board, and that's why you see these in 2020 and 21. That was the maximum.
So there's always been some friction through the years of how much is being distributed or not, and is that proportional to what should be distributed? And I think this is excellent data. Thank you for explaining that.
Great visuals. And I looked down there and saw Senator Betancourt snuck in. Senator, welcome. Glad to have you here, too.
Thank you, Madam.
And your light just came on.
Yeah, right.
Question.
And John, when we look at this, okay, the primary point of the chart is when you look at the initial corpus here, effectively, and where we're at now, and you want to see that the distributions are keeping up with that rate of change. That would be the I think the point of your graph. True.
I think that's accurate. Yes, sir.
Mm-hmm.
Right, and really, if it hadn't been for some of the recent changes that you mentioned, because out of the last I'm going 10 years, there's been 4 years of SLB distribution. So when those years are included, then you get close to the same 50% plus increase, but without that, you don't see that increase. And so this is part, I think, members, right, of the issue when we have these multiple different funds, and when you're looking at it from an aggregate viewpoint, we want to see that the distributions are more are more key to what the overall corpus of all the bodies are doing, and not the individual donations of each one. Thank you, Madam Chair.
Thank you. On page 3, the ESF returns in your presentation are from before we passed Senate Bill 69 last session, right? That was what the bill that allowed the comptroller to invest a greater portion of the ERS money. Do we know how much additional investment revenue we've received already from those investments? Maybe?
We don't have that at our fingertips.
Or maybe the
I know the
comptroller?
comptroller's here, and I think they could probably speak to that.
Is the comptroller here, or is that, yeah, yes, good, but we don't need all of you. We just... Thank you.
Sure.
So did you, you get my question. Senate Bill 69 was the, let the comptroller invest a greater portion of the ERS. Do we know how that would add on to this chart?
Sure. My name is Mike Reisig. I'm the acting CEO of the Texas Safekeeping Trust Company. I have with me Richard Shaw is the acting CIO of the Texas Safekeeping Trust Company. And the specific answer to the question you have, I don't have it specifically, but I'll give you an idea.
Yeah.
Yeah, last year in the for our investments of the Economic Stabilization Fund, our return was 4.1%, and our return in the Treasury pool was about 2.4%. So that's about 1.7% above the Treasury pool yield that it would have earned in actually, if it had been in the treasury pool.
That's
And
what,
so
that's
it
what
was
we
a-
want to know.
it was- that's probably the short, long and short of it.
Yeah, yeah, good.
I would just say that's the answer for the full year period. And the reason we don't have the number for you specifically is because, as you know, there were significant cash inflows into the ESF over the course of just the last 3 months due to the legislative change.
Right, right. Good, that's what we wanted to know. Just
Right,
keep-
thank you.
and we'll be asking that again.
We'll be ready.
We'll be ready.
Other, do you have a question? Okay, good. Any other questions, members of this panel? Don't go yet, because I'm assuming, John, you're going to be here with us all day long today, but I don't know if you're going to be sitting in front of us. And members, I want to take the opportunity right here, right now, to recognize this man who, for what, John, 20 years, has been working for us, for Senate, for Finance Committee, for me, he's been, and yes, John is, we really are grateful for your expertise and all of your hours and hard work, and wish you very well in the future.
Thank you, and it's been my pleasure to work with you, Madam Chair, in this committee.
Well, we love you. Oh, now I need my Kleenex again. By the way, I'm not crying. I have allergies down here. Okay, next panel.
Madam Chair?
Yes, sir?
Okay, obviously, I hadn't been around for a while, but you're getting ready to leave, obviously.
That's right. I'm just heading up the
And you answer their
road.
questions like you answered the other questions. Right. What are you getting ready to do?
I'm going to I'll just be up the road at UT Austin.
He's not going far.
Not going for What is it? People leave the legislature and go to UT Austin? Is that not this
All right, enough. Thank you. And John, I know you're going to be around, but we really, really do appreciate all you've done. All right, so at this time, I'm going to call up our second panel, which includes the University of Texas. Ha ha ha! We were just talking about them, and Texas A&M Investment Company that we know as UTIMCO. Along, you know what? Let's bring them up one at a time because I think let's bring up